Hey guys, Scott here. I have been getting a heap of questions about Victoria lately, and you can feel the confusion in them. People keep saying, what is going on in Victoria? Is Melbourne cooked? Should we get out? Or is it about to wake up in 2026? And I get it, because you look around the country and it feels like every other state has boomed hard over the last 4 or 5 years, while Melbourne has felt like it has been stuck in second gear for ages. Right now, there are two loud camps online. One camp says Melbourne is a basket case and it is not investable because taxes and whatnot. The other camp says, hang on, maybe 2026 is when things change and it starts to recover. For this video, I pulled every major data point that actually moves the housing market and I stitched it together in one place so that you don't have to jump between 20 articles and 10 different charts. You are not going to find all of this context in one spot anywhere else because most people talk about one stat and call it a day. And that is how Aussies get confused. By the end of this video, you will have a clear view of what is changing and what is not, and what that means for Melbourne in 2026. Quick one before we get into it. If you want regular breakdowns on property and the economy so you can stay a property insider, hit subscribe and hit the bell icon, then come straight back because this one matters. Okay, let's go. So in this first part, before we jump into the indicators, let's quickly cover why Melbourne fell behind, because it did not happen for no reason. Victoria got hit with a perfect storm. Lockdowns hurt confidence. People left for lifestyle and affordability to other states, and investor appetite dropped after policy changes made holding property feel harder than it needed to be. So while Perth, Brisbane, Adelaide, and other parts of Queensland were pulling people in with cheaper housing, livability, and better sentiment, Melbourne lost momentum at exactly the wrong time. That is the background. Now, the real question is whether the drivers that pushed Melbourne down are still in play or whether they are fading. Let's start with the part that is easiest to see and hardest to ignore. Melbourne is now sitting as the most affordable major capital by median dwelling values. As of December 2025, Melbourne is around 827K, while Sydney is about 1.2, 1.3 million, and Brisbane is about 1 million. That gap changes buyer behavior because people do not buy the city with the best opinions online. They buy the city where they can still afford a home. Now look at the dwelling price to income ratio chart. The figures you see should tell you how many years of income it would take, in theory, to buy a typical home if nothing else existed. Melbourne sits at around 7.5, which means the typical home costs about 7.5 times the average household income. Compare that to Sydney at roughly 10.3 times income, Brisbane around 9.8, Adelaide is closer to 10.8. That gap is massive. So Melbourne is not only objectively cheaper, it is cheaper relative to incomes too. And that affordability is already pulling demand back in. Victoria is leading the country in the share of new home loans going to first home buyers at around 26%. Compared to the national figure of just 20%. That's a big gap. That matters because first home buyers and upgraders are usually the first group to move when a market becomes the best value option, since they are the most sensitive to price. So here is a shortcut for finding out where the next price boom will be. There are many different factors, but this is a key one. If you want to know where the prices will rise next or where to buy next, follow where people are going. Because demand is literally people needing somewhere to live in the place where they want to live. During COVID and right after it, Victoria lost momentum because people were leaving and overseas migration dropped. That was the double hit. If you look at the interstate migration chart, the trend is pretty clear. Victoria is now back to gaining people from other states, while the rest of the country is cooling off. Fewer people are moving to Brisbane and Perth than they were during the boom, and Adelaide has actually tipped into people leaving. The logic is simple. The places everyone rushed to for affordability and lifestyle are no longer cheap. Rents have skyrocketed. House prices have risen exponentially, and what used to feel like a lifestyle upgrade has turned into a cost of living squeeze in these locations. For a lot of people, the reason they moved in the first place no longer exists. And this is why Victoria suddenly matters again, because when affordability shifts, people shift with it. Therefore, the migration data is so important. It's not random and it's not sentiment. It's actual people. It's people responding to cost jobs and the lifestyle realities in real time. Now let's talk about the thing that keeps demand stable when sentiment is messy. This is the economy. Victoria is still one of the biggest economic engines in the country. Look at this chart. Since the pandemic, Victoria is sitting around 13.4% economic growth, which puts it near the top of the pack. On the share of GDP table, Victoria is second to New South Wales at about 22.7%, which tells you Melbourne is still a national heavyweight for employment and business activity. Now, yes, the debt level is the big yellow flag people bring up, and it is real. But from a housing lens, the important point is that Melbourne did not suddenly lose its economic strength or its job base. People in Melbourne still have a stable source of income to sustain the demand for housing. It just went through a cycle where confidence and policy settings push people away, and those forces can change faster than people expect. And you need to remember, policies move in cycles, and they move according to the political cycle, which will and does change. One of the biggest reasons Melbourne prices didn't grow was policy. After COVID, the Victorian government was loaded with debt, and housing became the fastest way to raise revenue. Land taxes went up, holding costs increased, and the message was pretty clear. Owning property in Victoria just got more expensive, people left, sentiment collapsed, and Melbourne stalled. That led to two outcomes. The first is that the government has now shifted course. Stamp duty exemptions for first-home buyers have been expanded, so now buyers can enter the market with just 2% and not pay heavy taxes, and off-the-plan stamp duty has also been slashed for investors. And don't overlook that one is big. The second outcome is very interesting. Some taxes are still there, but here's where the real shift is happening. And this is important, so listen carefully to this one. Buyers and investors are redoing the maths and realizing the fear around policy was louder than the reality. When they compare properly, Melbourne versus Brisbane, the Gold Coast, or Adelaide, they see the same home in a similar location already costs $200,000 to $300,000 more, and the competition is brutal. So the mindset changes. It moves from, I hate taxes, I need to get out, to I don't love taxes, but there's no way I'm paying an extra $200,000, $300,000, $400,000 for the same house in an overpriced market. That shift is what's pulling buyers and investors back into Victoria. And when they return, while first-time buyers are already active, competition starts building again at the affordable end. Supply is what turns a slow market into a fast market. When buyers come back but sellers hold off, the same stock gets fought over harder. Look at this new listings table. Melbourne had 11,136 new listings in December 2025 compared to 19,779 in November, which is a big seasonal drop. And you also see that monthly fall showing as 43.7% on the table. In plain English, that means stock is not flooding the market right now, and plenty of owners are holding because they think that next year they can actually get a better price. When demand improves and supply stays tight, auctions get more competitive and prices can move quicker than the mood suggests. That is how markets catch people off guard. And I can tell you, in all my experience, the booms that we've had in different locations over time have totally caught unprepared investors off guard. So here is the clean summary. Melbourne has a serious affordability edge. First-time buyer participation is strong. The people flow story is improving. The economy is still a national heavyweight. Sentiment is way less toxic than what it was, and supply is not loose. That does not mean every suburb will fly. It means the areas with the right mix of affordability, lifestyle, and access to jobs are the most likely to lead. And you're already seeing examples of that on the ground. Frankston is one example where buyers are seeing properties that were around $600,000 last year being closer to $800,000 now, which shows you how quickly a pocket can move once competition returns. I personally just bought an apartment in Frankston for this very reason. So the real question for 2026 is not, is Melbourne dead? The real question is where demand stacks up first while supply stays tight, because that is where the next leg of growth usually starts. Now, I want to hear from you. Do you think Melbourne stays stuck, or do you think 2026 is the year it starts catching up because the gap is now too big to ignore? Drop a comment below and tell me what you're seeing on the ground, because I read them all. And if you want to stay a property insider, make sure you hit the subscribe button and hit the bell icon so you never miss one of my daily breakdowns. This is your daily property update, your 5 to 7 minute update every single day, so you can become a property insider and know what is happening in the property market so you can make the right moves. I'll see you in the next one.